Welcome back to the No Limit Crypto channel. In this video we are going to take a look at Avalanche, what is happening on the Avalanche chart. If you enjoy these daily Avalanche and other cryptocurrency videos, please consider liking and subscribing. That helps me out massively. So what is happening? We are really testing this $50 mark. I've drawn a range over here, a rectangle, and this is the zone. I think this is going to be a super important zone for us. Breaking this, that means bad things, and staying above it doesn't necessarily mean good things yet, but it's much better than going under it. So right now we are just ranging. We are between the zone and this line at $56, $57. We're staying here and nothing is really happening, which is not a bad thing. We made a massive move last week. We made a over 100% move last week. And after those moves, we often see a consolidating period, and staying above a key support line is important in those periods. We don't want to see us dropping far back down. I much rather see us staying close to the all-time high. We're still close to the all-time high. Even from the bottom of this zone, which is at 49, we're only 30% away from the all-time high, which obviously in crypto markets is not that much. Even if you consider the last week's move, which was 100%, 30% isn't that much. But this range right here, the chart, it isn't really giving me a lot. We're just ranging over here. We're not getting any patterns forming. We're creating lower lows, but we're creating higher highs. Excuse me, exact opposite of that. We are creating lower highs, but we're creating higher lows. And we're just staying here, trying to push up and push down. So if I would have to guess and predict something, I would guess that we are going to stay in this zone for the foreseeable future until we get some sort of signal of a break to the upside or to the downside. So let's take a look at those things, what might happen if we break to the downside. Let's be conservative. Let's look at the downside first and be realistic, because that is also a possibility. We can't only go up. So downside, what do we have? We have this trend line, which was a strong trend line. It has been tested here, really pushed long, like fast down after that. When we broke this trend line last week, we came back down, tested it, and made a big move to the upside. But the issue with this trend line is that it's sloping downwards. So breaking 50 and coming here into this under the 50 line and moving up, I'm expecting us to find some sort of support here. But at that point, we might start looking at us slowly moving down with this trend line. That is obviously a slow way to move down, and if we can stay closer to the all-time high, that's always better, but it isn't that amazing. As you can imagine, like, and also in the shorter term, we have created us a bit of a problem if we want to take a look at the upside move. So we draw this fib from the swing low to the swing high, and let's look at this. So we know that the zone between 61.8 and 78.6, that is the toughest zone for us to break. So this zone right here, this would be a tough zone to break, and what really makes that zone even worse is that it is right around the $60 mark. that is absolutely awful. If we successfully break above this range, we're not clear, we're not pushing for all-time highs yet. We still have a lot of resistance ahead of us if we successfully break to the upside. So there's nothing really amazing happening, there's nothing bad happening, there's nothing good happening. And when we are in a region in the market when there's nothing good happening and nothing bad happening, that is often gonna be a range. That's gonna be a ranging market for a while until we get some sort of signal that we are moving into a downtrend. And what would be that real downtrend signal? Even in the shorter term, we obviously have to move to a downtrend in the shorter term for us to move into a downtrend on the longer term. And this is a thing that you can easily do on your own charts too. Look at either the 200 EMA or the 200 SMA, simple moving average. So right now I prefer the 200 EMA a lot. There's other people who prefer the SMAs. I look at both. I have a ribbon for EMAs and I have a ribbon for SMAs. But right now I'm looking at the EMA. So we came back down. The EMA is right here with us at the $50 mark. Breaking under that EMA is indicating that we are entering a downtrend. And at that point we need to start looking at support further down. Because if you look at this, we have broken through this EMA up here, made a massive move up. We broke through to the downside, had a massive dump. And the moves often when we break the 200 EMA or SMA are often going to be pretty significant. Like you can see, even this is a small move in comparison to these other ones, but that is still a 17% move. So the downside is going to be quite large if we go under. And if we look at where we could end up if we go under and also break this support, possible support right here, we can go to the daily chart and we can draw a fib from the bottom to the high. And here again we are looking at 61.8 and 78.6% fib. This zone right here, that is the zone we're looking at. And obviously, if you are staying realistic and looking at the longer term, I really hope people are looking at the longer term in these ones, because the short term moves are just noise in the market. Look for the longer term. So in the longer term, a push down here, that's the wrong one, the push down here to the 78.6, for example, the worst case scenario. It's not that easy to see. I'm just gonna draw it like this. So this is actually not that bad. I've been looking at this in a lot of my videos and I try to really push this to people, that having these large corrections are not bad things. It doesn't be like, it's, if you put it into numbers and say that we went from 60 to 40, that seems so bad. But if you put it into perspective, going from 60 to 40 right here, it is a big correction, but we are still creating a higher low. And those are the things that we're looking at. Probably one of the most important things in this market is to look at higher lows and lower highs, or higher highs, higher lows, lower highs, however you want to put it. But we would still make a higher low, and that is a significant thing. That is the most important thing. Think about the long term, stop thinking about the short term, and that's a much easier way to look at these things. If you enjoyed this video, please consider liking and subscribing. This was all from me. Thank you very much.